It's not gold going up,
Mm-hmm.
but it's the currencies going down, in this case, the dollar. It's the currency falling in terms of its purchasing power. That is why the Chinese, the People's Bank of China, are buying gold. It's not so much they're buying gold, they're selling dollars.
Right.
And, do they want to buy another currency? No, they don't. They don't want to buy another, they don't want to buy euros because it's exactly the same story, or sterling or whatever, or even Japanese yen. They don't want to buy those. So where else do you go? You get out of fiat and you get into real money, which is gold. And that's what they're doing. And this is why there's so much speculation, if you like, about China's long-term intentions in terms of guaranteeing the value of the yuan. Will they go onto a gold standard?
For years, analysts have debated China's intentions to challenge US dollar dominance, yet few fully grasp the quiet but profound transformation that is already underway. While much of the world focuses on visible tensions like technology conflicts, Taiwan, and trade disputes, China pursues a subtle, long-term monetary strategy. China lays the groundwork for reshaping global finance through a significant, likely underreported accumulation of gold reserves, gradual internationalization of the yuan, and cautious liberalization of its bond markets. This emerging plan aims to elevate the yuan toward reserve currency status without fully backing it with gold or sacrificing its export-driven economy. As Alasdair Macleod emphasizes, this strategy is not mere currency competition, but a comprehensive effort to undermine the dollar's hegemony by building trust and stability through physical assets and measured reforms. China's economic strength has long relied on maintaining a deliberately weak yuan to keep exports competitive, supporting large trade surpluses essential for employment and growth. However, this creates a fundamental paradox in China's ambitions to globalize the yuan. Reserve currency status demands international trust, liquidity, and stable demand, which typically strengthens a currency's value. Yet a stronger yuan could harm China's export advantage and disrupt economic growth. Macleod highlights that China must carefully balance these conflicting goals, preserving yuan weakness to fuel exports while fostering international confidence to enable global adoption. This balancing act shapes much of China's monetary policy and market maneuvering. Macleod also highlights that China is quietly amassing a vast gold reserve far exceeding the officially reported 2,000 tons, potentially reaching as much as 20,000. This significant stockpile, gathered through domestic mining, discrete purchases, and transfers via state-owned banks, serves a strategic purpose beyond simply backing the yuan or enabling full currency convertibility. Instead, gold functions as a crucial financial safeguard, strengthening China's balance sheet, hedging against the US dollar's decline, and preparing for future geopolitical uncertainties. By holding such a significant reserve, China reinforces its credibility with global partners, particularly within the BRICS coalition, while preventing a surge in the yuan's value that could harm its export-dependent economy. Now, we present the clips from Macleod's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The only thing I would say
Long-term,
is that people will have to understand, to put this into context, they have to understand it's not gold going up, but it's the currencies going down, in this case, the dollar. It's the currency falling in terms of its purchasing power. That is why the Chinese, the People's Bank of China, are buying gold. It's not so much they're buying gold, they're selling dollars.
Right.
Do they want to buy another currency? No, they don't. They don't want to buy another, they don't want to buy euros because it's exactly the same story, or sterling or whatever, or even Japanese yen. They don't want to buy those. Where else do you go? You get out of fiat and you get into real money, which is gold. And that's what they're doing. And this is why there's so much speculation, if you like, about China's long-term intentions in terms of guaranteeing the value of the yuan. Will they go onto a gold standard? There's no doubt about it that China has been accumulating gold ever since the People's Bank of China was appointed by law back in 1983 to handle the Communist Party's acquisition of gold and silver. That was 1983. They accumulated as much as they wanted up until 2002, when obviously they decided that the state had had enough. And incidentally, they became the largest nation by gold mine output. And that was a deliberate act of policy. They also imported Dory, and they're still been importing gold from outside China, in particular from our markets. In 2002, they decided that they'd got enough gold, and it was now the time for private individuals to acquire gold. Why? Well, I mean, if you go back to Marxist theory, and this is what they were teaching in all the universities in China, I mean, really from the time of Mao Zedong all the way up until fairly recently. They're probably still teaching it as far as we may know. But they've been saying that capitalism will eventually fail, and that's once it's failed. That the next step is to go into the sort of the communist. The interesting thing is that Marx was talking about the bourgeoisie, and of course, we hear about this and we sort of immediately associate Marx with the destruction of the bourgeoisie. That actually wasn't quite his policy. His policy basically was that the bourgeoisie basically make the money and get the economy to the sort of state their wealth can be transferred to the state on behalf of everybody else.
Yeah.
So as far as Marx was concerned, the bourgeoisie were doing the communist God's work.
And the Soviet Union is where they went wrong, according to the Marxists, is that they put the cart before the horse. They didn't allow the capitalists to build out the base for the communists to then take.
Get back to, I mean, as far as they're concerned, if they can see that capitalism in the West is going to fail, then obviously their fiat currencies would go with it. That's why they had a gold policy. And incidentally, it's also why they had a silver policy, which, of course, I think very, very few people really realize. I mean, it's interesting. I attended a conference in New York, which I was speaking at. That must have been about 2011, I think probably about 2013. So we're talking, a bit over 10 years ago. And there were lots and lots of silver exploration companies exhibiting at this conference. And at the time, there was a lot of, sort of conspiracy theory stuff about how J.P. Morgan were banging the market every 5 minutes, and then you had what was her name, Blythe Masters, who was head of the commodity side. She deliberately went on I think it was CNN, make it absolutely clear that J.P. Morgan did not take positions in the silver market. Now, of course, everybody running the conspiracy theory sort of thought, well, yeah, this woman's lying. But I can tell you, I've known people like Blythe Masters, and they are extremely careful about what they say in public. They really are. There's no way she was lying. Going back to the conference, I asked these silver miners, I said, right, when you produce your silver output, doré, whatever, how do you turn it into cash to pay the wages and pay all the energy bills and all the rest of it? And they all said exactly the same thing. A man from Glencore comes around, he assesses the value of the doré, then they're paid by a bank, which presumably was JP Morgan, because if we're talking about a large lot like Glencore, it's obviously JP Morgan. It's then shipped off. And I said, well, where's it shipped off to? They said, well, we don't know, but I mean, presumably China, but we don't actually know for certain because it's not our business anymore. I mean, we're just paid when it leaves the site. If you look at the other end of it, obviously JP Morgan would also be acting for China on the futures market. So what we have, and it's quite easy to understand, what we have is we have silver in the form of doré, but it's still silver, bypassing the market and then being hedged in the market. So that was the suppression. Wow. They were doing this. They've been doing this for ages. And bear in mind that China is something like the 5th largest producer of silver in the world itself. I mean, she produces a lot of silver. And she was importing this stuff. I mean, at the time, it sort of played into her hands because refining silver isn't a very environmentally friendly process. I think the Canadians pretty much stopped it. So, I mean, the Chinese were quite happy to do it. And so they accumulated a hell of a lot of silver. And if you look at, the Silver Institute's numbers and how, there's always a shortfall, certainly in recent years, of supply on demand. I mean, where's the difference come from? I guess that China has basically been feeding the market to try and control the price.
Renowned analyst Alasdair Macleod expresses serious concern over the ongoing suppression of silver prices, revealing a complex and carefully managed system behind it. When silver is mined, it is typically refined into d'Or bars and then sold through companies like Glencore. Payment is often routed through major banks, most notably J.P. Morgan, which plays a crucial role in this opaque process. Although the silver leaves the mining sites, its ultimate destination remains unclear, most likely China. Yet this information is deliberately kept out of the public eye. The key point is that this silver supply bypasses the open market while being heavily hedged on futures exchanges, allowing for precise control over its global price. This mechanism effectively suppresses silver prices by creating an artificial balance between supply and demand, ensuring that silver remains undervalued despite rising demand and constrained supply. China's involvement in this silver market manipulation is particularly significant, given that it is the world's fifth largest producer, yet it imports vast quantities of silver. This apparent contradiction is part of a strategic move by China to control the silver market while avoiding the environmental and economic costs of refining large quantities domestically. By quietly stockpiling silver, China manages to keep a substantial amount of the metal off the market, contributing to the persistent supply shortfall reported by institutions like the Silver Institute. This stockpiling aligns with China's broader ambitions to secure critical resources for future technologies, such as rare earths and silver, for photovoltaic cells and grid electrification. Recent data showing shifts in China's silver exports, moving away from traditional financial centers like London and Hong Kong, suggest a recalibration of their market strategy, hinting at a new phase in their control over silver's global supply and price dynamics.
And also, of course, they're the largest global manufacturers of photovoltaic cells. I mean, they've got every reason to have a huge stock of silver.
Mm-hmm.
The other thing I discovered, which was fascinating, was that China's exports in 2023 of silver, I think the figure was something like 250 million ounces. It matched pretty well exactly the Silver Institute's shortfall on its assessment. Now, the other thing that was interesting is if you look where the silver was sent, it was sent to London, it was sent to Hong Kong, I think Singapore was in there as well, most of it going to those centers. Now, these are not large consumers of silver, but they are financial markets. That tells me that they were suppressing the price. We now have a situation where I just wonder whether it's in their interest anymore to continue to do that. And so far as I can see, the 2024 exports of silver have been significant, but not to financial centers. So I think there's a sort of change in China's thinking. Very, very interesting. China has accumulated huge quantities of gold. Now, if you look at Russia, apart from what the central bank's got, which I think is 2,000 tons or something, I'm told by fairly well-informed sources that there are two wealth funds. One is called the Grok Fund, believe it or not. Those two funds have got something like 10,000 tons of gold between them. That's what we're told. So they've got around about 12,000 tons of gold. Not only that, but they're accelerating their mine output. They're now, I think, joint second largest producer with Australia, something like that. The central bank holding is about 2,000 tons. There's another 10,000 held in various principally two wealth funds.
Okay.
But when it comes to mine output, I think we're looking at about 350 tons. I mean, this is off the top of my head.
Of silver. I was thinking about gold.
But Russia could go onto a gold standard tomorrow. I mean, it's fascinating how the propaganda, the anti-Russian propaganda, because of the war and because of Putin and all the rest of it, is such that you get serious writers, economic commentators saying that Russia's bust. It's not. I mean, its debt to GDP is less than 20%. If you look at the tax rate for ordinary people, income tax is around about 13%. I mean, if you make a lot of money, you pay 15%. Corporation tax is about 25%, which is the same as it is in the UK, similar, I think, in America and Canada. The inflation rate is high. Yeah, I mean, it's running at something like 8%. Now, I don't know whether that's because they actually report a proper inflation rate, which we don't. I mean, John Williams would argue that we've had 8% inflation and more for some considerable time in the United States. In Russia, people's wages have been rising very, very sharply. I mean, if you're employed, I think as a reasonable level of employment, then you're getting wage rises of, sort of 20, 30%. I mean, this is against an inflation background of, around about 8%. And so what banks are doing is banks are encouraging people to save. And these guys are saving, which we don't do. They have an economy which actually could switch, very, very quickly into a gold standard.
China's strategy of suppressing gold and silver prices may provide it with temporary control over the market, but this approach could lead to significant challenges in the future. By artificially holding down prices, China delays the natural market forces that would reveal the true value and demand for these precious metals. This suppression risks building pressure beneath the surface, and when that pressure finally releases, it could trigger sudden and sharp price spikes that catch global investors and financial systems unprepared, resulting in heightened volatility and uncertainty. Over time, as trust in traditional currencies wavers and the world looks for more reliable stores of value, gold and silver will likely regain their importance in the global economy. While China's current actions help it quietly accumulate reserves and maintain strategic leverage, they also set the stage for a potential market upheaval, forcing a rapid adjustment that could reshape the global financial landscape and increase the centrality of precious metals in future monetary systems. That's it for today. Share your thoughts on Macleod's gold and silver price suppression prediction in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.